Hello, everybody. We're gonna do a little bit different tonight and make this more of a fireside chat. And we'd like to also make it more of an interactive since it's a small group. So Carla Harris is the Vice Chairman, Wealth Management, Managing Director and Advisor at Morgan Stanley. She's responsible for increasing client connectivity and penetration to enhance revenue generation across the firm. She formerly headed the Emerging Manager Platform, the equity capital markets effort for the consumer and retail industries, and was responsible for the equity private placements. Ms. Harris has extensive industry experience in technology, media, retail, telecommunications, transportation, industrial, and healthcare sectors. You could have just said all sectors. In August 2013, she was appointed President Barack Obama to chair the National Women's Business Council. For more than a decade, she's been a senior member of the equity syndicate desk and executed transactions for initial public offerings of UPS, Martha Stewart, Ariba, Redback, General Motors, and a $3.2 billion common stock for Immunex. Ms. Harris was recently named to Fortune's magazine list of the 50 most powerful black executives in corporate America. U.S. Bankers Top 25 Powerful Women in Finance, 2009, 10, and 11. I don't know what you've been doing the last 3 years, but
Slack.
Black Enterprise's Top 75 Most Powerful Women in Business. She began her career at Morgan Stanley in the Mergers and Acquisition Department in 1987. Prior to joining Morgan Stanley, she received her Harvard Business School MBA, second-year honors, and an AB in economics from Harvard University, magna cum laude. Carla has also received honorary doctorates of laws, humanities, and business from Marymount, Bloomfield, Jacksonville University, Simmons College, and the College of New Rochelle, St. Thomas College, and Fisk University. She's actively involved in her community and heartily believes that we are blessed so that we can be blessing to someone else. I really wanted to talk to Carla today selfishly about what we're doing as a society and how we can do it better in terms of the areas of women participation in finance, mentorship, and also how do we help people to break through the glass ceiling and improve themselves in their careers. So I'd love to, if you want to start with mentorship, and we can go back and forth from there.
Well, thank you very much for the invitation to be here and have this conversation. These are all topics that I love and are near and dear to my heart and that I do have an opinion about. So let's start with the mentorship. I wrote a book in 2009 called Expect to Win, and in chapter 5, I wrote the difference about the difference between an advisor, a mentor, and a sponsor. And what provoked me to write that was that popular business press used to always say you need a mentor, you need a mentor, you need a mentor, but they didn't tell you what a good mentor was supposed to do for you, nor do they delineate the difference between a mentor and a sponsor. And I've been talking about sponsorship since 1990. And now people who were in the audience when I was talking about it, they're writing books about sponsorship, they're doing research on sponsorship, and I could not be more thrilled because it is indeed a critical relationship to have in your professional journey. So now the difference. The advisor, and obviously we're not talking about financial advisor. I know advisor means something different in this room, but an advisor is anybody in your environment that can answer any distinct question that you might have in your professional environment, at your work, at your job. And this person is the person that has the intellectual capital or the experiential capital to answer any discrete question. Oh, I'm going to be working with Dan. Can you introduce me to Dan before we start this project? I'd like to get to know him. Oh, Peter, walk me through the weighted average cost of capital. I think you all do it differently than I did it at my old firm. Or Martha, I'm having my first client presentation. Can we review the table of contents? I want to make sure I don't miss any of our competitive arguments. All examples of discrete questions. The mentor, on the other hand, is the person that you tell the good, the bad, and the ugly to. This is the person that you share the intimate details of your career with, your fears, your concerns, your mistakes, your triumphs, your strategies. I'm in this box, I want to be in this box. Who do I work and how do I get there? So by definition, it needs to be somebody that you trust. You don't just choose someone and say, oh, Steve's been in this business for 30 years, he's going to be my mentor. Because if he doesn't know you very well, he cannot be a great mentor to you, because a mentor's job is to give you tailored advice, tailored specifically to you and to your career aspirations. If I know John and I know Joe, they both want to become managing directors, and I'm a good mentor, I will give them two different strategies because they are two different men. And my job is to give them tailored advice that they can successfully execute. Your mentor does not need to be within your organization, nor do they need to look like you, but they must understand the context that you're working in order to give you tailored advice that you can successfully execute.
Can I just ask you one question? I had a mentor relationship with someone, and I had lunch this week. And it's hard to know where the role of business mentor and the role of personal mentor, and like he's asking me, should I buy a house now? Friends of mine are buying a house, and I feel like I'm living in an apartment. Should I be doing that?
Yes.
I said, have you paid down your student loans? Where are you, do you have a down payment? Where do you feel like you're going to be in 5 to 7 years? Because you need to commit. But I sit there and I go, is this really what I should be doing as a mentor? I feel like it builds goodwill and it builds a relationship, but I don't know if it's really mentoring his career.
Well, but I would say to you that you could also put yourself in the role of an advisor. If you knew him very well, and let's say you knew that he was thinking about getting married, you also knew that, or he wasn't thinking about getting married, if you knew more things about him, so from a personal standpoint, then you could say something like, oh, well, Mike, you know that you're not interested in settling down right now, but given your background and where I know that you're from and where you're going to, if I were you, I would think about that a little bit differently now. Why don't you wait and continue to save your money and pay it down, because you're making it specific to him and what you know about him. If you didn't know any of those things, as an advisor, you might give similar advice. You might say, in general, it makes sense to pay down your student loans before you think about making a major investment like buying a house. So blah, blah, blah. And that's advice you would give anybody. So when you think about who you are as an advisor in somebody's life, it's not that you don't give them really good advice. You can give anybody really good advice. But now if you know more about Mike, his aspirations, or where he's from, or what he's doing right now, you might tailor that advice for him that could be a little different than what you would give as generally good business advice.
Yep.
So you with me? That's the nuance.
It's just a very hard line sometimes when you think about it. Like he's talking to me about working until 10 or 11 at night every day, and coming home and collapsing into bed and then getting up the next day and doing it again.
Right.
And I'm saying, do you feel like they're rewarding you? And are you being appreciated for your work?
Right.
And do you have the balance in your life that makes you happy?
Oh, and that's just good advice.
Well, is it? I mean, if his career wants to succeed, the people in New York that are managing him want him to be there at 11 o'clock at night.
Right.
But in my sense, I feel like they're taking advantage of him.
Well, I would say that, but if you know that that's good advice and that's what he needs to do to succeed in an industry because that's what's expected of him, that's advice that you would give him in any case.
Yep.
All right, so I would say that in that case you are acting as an advisor, maybe / mentor. But again, if you know that Mike is the kind of person that burns out pretty quickly and that he's not going to last and he's going to combust, then an advisor would say, well, that's what's expected in that industry in order for you to be successful. So you need to make a decision about whether or not you really want to be in that industry. But if I know Mike is going to combust, I say to him, Mike, this is probably short term from you because you don't do well long in these kinds of situations, and that is what's required. So if I were you, maybe I would think about a different seat in that organization that would not require you to do those kinds of hours, because that seat means you have to do these kinds of hours. So, I mean, are you guys with me in terms of the nuance of the advice versus the mentoring, right? Mm-hmm. So now let's talk about the sponsor. The sponsor does need to be within your organization. I said that mentor did not need to be. Your sponsor must be within the organization. They must have a seat at the decision-making table, and they must have the juice to get it done for you. And the sponsor is the person that's carrying your paper into the room. This is the person that behind closed doors will argue passionately on your behalf as to why you should get the promotion, why you should get the great bonus, why you should even get the next great assignment or opportunity. This is the person that's spending their valuable political and social capital on you. And there needs to be a good reason why they're spending this capital on you. And I'll tell you that in my opinion, you can survive a very long time in your career without a mentor. but you will not ascend in any organization without a sponsor. Somebody's going to have to spend that capital on you behind closed doors. And as you get more senior, the performance aspect of the decision is a smaller component. It's all about the relationships that you have in the environment. And that's when I talk about performance currency and relationship currency. After 3 or 4 years in any environment, the performance currency, which is worth about $1.50 when you first start in any environment, it starts to experience diminishing marginal returns. And that $1.50 goes down to $1. Why? Because now people expect that you will do a great job. It's expected that you will always deliver with excellence. So there's no premium associated with your deliverable. What matters now are the relationships that you have in that environment, and that's what makes the difference in your moving up in an organization.
Okay.
Now, the women, you said. In
Yeah,
the
well,
business.
like what do you think about our industry in terms of 20% of the CFA population being women?
Yeah.
I mean, it seems to me that this industry, is it suffering from a trust deficit? Is it suffering from lack of knowledge? Is it suffering from, what is it that we need to do differently to make this a more well-balanced in terms of representing society?
Yes, I'll tell you that in my opinion, the reason why you don't see more women on the wealth management and the asset management side of the business, despite the fact that it's probably one of the best places for women in terms of being able to run your own show and do your own thing. My belief is that there are not enough women who are exposed to this business early on for them to make a decision. I went to Harvard undergrad, as you've heard. I never had one person the entire time I was there talk to me about wealth management. Now, all the investment banking programs came to Harvard, so that's how I got exposed. I went to Harvard in 1980, and I went there like the other 800, because there's 1,600 people in Harvard's freshman class. 800 want to be doctors, the other 800 want to be lawyers. So, right? So I was in the half that wanted to be lawyers because that's what I knew. So it wasn't until my sophomore year when I got exposed to a program over the summer that was specifically looking for talented kids of color to come to Wall Street, so Wall Street could get exposed to talented kids of color in hopes that there would be a marriage for these newly created analyst programs, because Wall Street created the 2-year analyst programs in 1982. So here I was coming through the pipes at that point. They were hoping that they would hire us by the time we graduated, because the program was geared towards your junior summer. So if they saw you as you were a rising senior, then they brought you in right after you graduated, right? But I was a sophomore. I was the only one that year who got a shot as a sophomore. Well, that opened my eyes. All of a sudden, I thought I wanted to be a lawyer, and all the things that attracted me to the law, I thought, were actually found in business. So that was my aha moment, and then it put me on the path to go to Wall Street. But that was the institutional side of the business. That was mergers and acquisitions, corporate finance, capital markets, sales and trading. Nobody ever talked about wealth management. I went all the way through Harvard Business School 4 years later. Nobody ever talked about wealth management, right? So the problem is we're trying to recruit a group of people after they have already gone out and started a career. And that's a much harder sell to say, oh, you're a successful lawyer, or you're an architect, or you're doing whatever you're doing. Why don't you come to the wealth management side of the business? Oh, by the way, when you're going to lose that every 2 weeks paycheck and you're going to be on commission, let's see how you do. And especially if you've been a really smart, driven woman and had your head down acquiring all of these credentials, chances are you haven't really acquired a huge network where you can actually go out and figure out how you're going to build a book of business. And oh, by the way, success in this business depends on whether or not you can build that book, right? So I think that we would do a much better job if we were exposing young women to wealth management as freshmen and sophomores and giving them experiences over the summer and really talking to them about what success looks like. Because if you tell me as a sophomore and I fall in love with this business as a sophomore, then what am I going to do when I'm a junior and I'm a senior? I'm going to be networking like crazy. At the undergrad level, at the graduate school level, I'm going to go and study in the law school library. I'll study at the business school library. But my mindset will be around building a network that I can then go and hopefully try to fertilize and get some yield from when I start in this business. But that's one of the reasons I think we don't see more women in this business.
Do you think that, like we've talked about having events at colleges, and just getting out there and just giving people the basic information about what a CFA is and how they work.
Yeah.
One of the things we talked about is taking the more successful women in our society and having them make the presentation to colleges. How do we get the change in mentality about this industry that it is good for women?
Yeah.
And can you talk about what you think is holding people back?
Yeah, I think having a woman make the presentation is certainly strong, because when people see themselves, they go, oh, I can do that, right? And they get inspired. I mean, I remember I did Naval Junior ROTC when I was in high school, because a woman came to my 8th grade class in that really smart uniform, and she was sharp, she was smart. I'm like, okay, I think I want to do that, right? When I had no aspirations of going into the military at that point, but it attracted me because I saw this really strong, smart young woman. So I think having women do it, but I will tell you, I think having a really strong man who's been in the business, who's excited about it, who talks about it in a good way, I think will also be as attractive. But the point is to get the information out. And the other thing that I think the industry does not do a good job at is how we recruit people. I noticed that when, again, as you can tell, I grew up on the institutional side of the business and started working on the wealth management side of the business, recently and in the last few years. And it was interesting to me how I heard people recruit. I heard them say things like, do you think you would like to help people build their wealth? Do you want to help people save for their retirement? Do you want to help send people to college and help people send their kids to college? And I thought, that's a little bit misleading, right? Because obviously a 22-year-old likes the idea of helping people, and you say, oh, you'll get great client contact. A 22-year-old likes to think about getting a lot of client contact, but at the end of the day, it's misleading, because that's not how you're evaluating me. You're evaluating me on whether or not I can build that book, all right? So what I think we really are looking for in this side of the business is that we're looking for good entrepreneurs. Because at the end of the day, that's what you are if you're an advisor. You're an entrepreneur. And even if you are a portfolio manager in an institutional sense. So what we ought to be screening for is for people who have a good entrepreneurial profile, somebody who shows that they have a lot of tenacity. This person has a lot of perseverance. They have vision. They have good relationship skills. You think that they understand how to build something, and they are excited by the chase and by building something. They are self-aware, because maybe you're a good person that goes out and you can get the business, but you can't do customer service for crap, right? So you got to think to yourself, you got to be self-aware and think, well, I need to build a team that can complement, my skills, because all roads can't lead back to me if I really want to build a book, right? So you need somebody who kind of has that sense and that hunger, as we used to call it on the investment banking side, that hunger in the belly. That's what we should be screening for. What will that do for both sides? You heighten the probability that somebody will be successful in your organization, and you also help the institution, because we all spend a lot of money recruiting people in and spitting them right back out. And every time you do that, that costs money.
Right. I mean, can you talk a little bit about the different roles within wealth? I think that the new DOL, behaving as a fiduciary, has brought this issue of, independent advice within a brokerage environment, advice within a bank environment. Can you just talk a little bit about what you think the future looks like in terms of, I look at it and I say, I take the CFA, I sign my code of ethics, and I say I'm going to treat the client, as I, think I should treat them. Mm-hmm. And I look at that and I say, I don't understand why everybody doesn't have that. And I'm looking at this saying, this is a good thing, but then I look at the regulatory environment and what's happening, and I think that something that could have been a good thing. I mean, can you just talk a little bit about where you think we're going?
Yeah, I got to tell you, my jury's out on where I think we actually end up, but I think for now, I actually think that it should give clients a little bit more comfort that the people that they have on their team as their financial advisor is doing the right thing by them. And I think it's really the regulator's attempt, to continue to sort of turn the screw, if you will, with respect to Wall Street, and making sure that we're all, quote, doing the right thing. I think it will also add some complexities with respect to, the boxes that you have to check. which will mean that the team should get a little bit larger to make sure that from a compliance standpoint that everything is happening and that all the paperwork is in place, all the actions that are taken have to be documented so it can be clear that you are in fact acting in a fiduciary capacity. So my guess is that you'll probably see teams grow a little bit in order to make sure all of that's happening.
Do you think it's an opportunity for women in the industry? Because it seems to me that the women have the relationship with clients, and a lot of women are going to, a lot of wealth is going to be transferred to women in the next, and that it seems like that trust and compassion and sensitivity could be an asset as we start to go down this path of trying to do the right thing.
Well, I don't think the DOL is what's creating the opportunity.
No,
for women.
I'm just
But
saying that their skill set is going to fit well in this new environment.
Yeah,
Or
but
do
there are men who have that same skill set. So I'll tell you what I think is creating the enormous opportunity for women. And I think there's two enormous opportunities right now in wealth management. One is women and the other one is millennials. And here's my thesis. I think today there are more women that are acquiring wealth in whatever way you want to think about it. There's the person who's been working for 30 years who has acquired her own wealth and still has a lot of professional runway. There is the woman that, what I'm going to call seasoned wealth, that she may be 55 plus, she married wealth, and now that wealth is dying, but she keeps the assets. The man is dying, but she keeps the assets. I think there is the younger millennial woman that is coming into play, that is creating an app that she sells for $40 million and she's 23, right? So all of that, I think, is creating a real opportunity for women. And why do I say that's a unique opportunity for women? I think that the trust equation is a much heavier factor, if you will, for women in making decisions around financial advisors. I think that's one of the reasons that there's such a high percentage of professional women that don't have advisors, because they don't have the time to go and find an advisor. So believe it or not, and they will not admit to you that they've been working for 30 years and their money is sitting in a CD that's not earning anything, but they really haven't had the time to evaluate. And for something as personal as my money, I need to evaluate you, and I want to know that you're an expert, and I want to know that you have my best interest at heart, so I need to spend a little bit of time with you, right? So I think that this is a unique opportunity because more and more of those women are now at that late boomer stage and are taking the time to kind of think about, okay, where am I going? Because now I'm about to embark on me 2.0. I'm leaving this career after 30 years, doing something else. I now have time to think about who's going to be my advisor. I think that the younger professionals who also have money, they really care a lot about seeing another woman. They have told you that in the way that they behaved. So they don't have to have a woman, but they are attracted to a woman who's an expert in her space. So I think that will accrue to women advisors. And then those who are seasoned wealth, they are open, let me put it like that. They are open to different choices because Paul, the advisor, spoke to her husband, Jim, for 30 years, never looked at her in the eyes. She's pissed, he died. She's like, guess what, Paul? Who are you? Right?
At least you didn't say Steve.
So now I'm going to tell you she's open. I'm not telling you she's going to move, but she's open to a conversation. And if she's open, then somebody's got a shot.
Okay, what do you think it would take for an advisor, man or woman, to satisfy the woman that you are, that if you were looking for an advisor, what would you be looking for? First of all, would you pick a CFA? I think I know the answer, but what is it that you think is most important?
I would say that a CFA is preferred but not required, okay? And I would tell you as somebody who I think listens very well. You'd be surprised how many advisors I've talked to that do not listen. You'd be surprised. So someone who listens very well, somebody who's very responsive. If I have a question, they're right on it, right away. And somebody who is good at initiating ideas, who can bring ideas to me in a very pithy way, especially things that I may not be familiar with, but that can give me the quick bullet point version. Then I feel like that's my guy, that's my gal, because they kind of get it, they're listening, they understand what I need, and what they bring me is consistent with what I told them I'm looking for. And every now and then, they give me an idea that might not be consistent with that report card, just to kind of try it out to see whether or not I've expanded my horizons. That really is, and that's the profile of the person that I'm with. I will tell you that I was with a woman for a long time who not one time did she bring me an idea. And I was with her because I was on the institutional side of the business and I really couldn't play the market that much anyway because I had too much information. But when I did switch to another part of the business and I had capacity, I could bring my head up and say, oh, well, is this working for me? And then I realized as I listened to my friends and in the conversation they were having with their advisors that I wasn't getting any of that, and I made a change for exactly the profile I just articulated to you.
And how do you feel that, do you think that the industry is moving in the right direction in terms of how we talk to clients, how we engage clients, whether it's the wealth management approach, whether it's the alternatives approach? I mean, can you just talk a little bit about where you see the wealth management business matching or not matching what clients need?
Yes, I'll tell you that I've seen it now go from sort of the broker, to being very transaction oriented, to really being more full service and thinking about the entire family and thinking about all the needs. And I think that is absolutely the right direction, because there's so many things coming at clients today that you really do have to position yourself, and you don't necessarily have to position yourself as the expert, but you need to position yourself as the resource expert. So you don't have to know everything, but you need to know how to get it and get it quickly. And I think that a successful advisor would have on his or her board of directors a really strong lawyer, a really good trust and estates person, a really good elder care person, a really good accountant. So almost anything that a client may need in their life cycle, this person would be able to handle. And I think the industry is moving that way. The other thing the industry is doing is that they are very, very conscious about women. Now, no one has figured out how to talk to the woman that I'm telling you about. They really have. I mean,
that's what you're here for.
That's what I'm saying. We're getting there. we're getting there, and believe me, I'm singing the song as loud as I can, to as many people as I can. But that is where we need to get to, because that's where I think a lot of the wealth is going to be concentrated. Again, over the next 5 years. I don't think this is a 10-year phenomenon, and nobody has figured out how to talk to millennials. And what I've been saying to the industry is the following: what the millennials have told you is that they value each other's opinion. It used to be when you and I were coming along, I'm assuming you're my vintage, that when you and I were coming along, that people would say, oh, you're 27. Nobody's going to listen to you. You haven't bought your first house. You haven't bought your first car. You're still wet behind the ears. A 65-year-old is not going to give you his money. That's what we used to say to the young people trying to come into the business. But the issue is now people are acquiring wealth much younger. It used to be you didn't really acquire your wealth until late 40s, early 50s, which is why all the colleges wouldn't go after you till the 25th reunion, because they figure by then you've made some money, right? But now, go back to the example with the 27-year-old who's just sold an app for $40 million. That's happening a lot. And what the millennials have told you with Facebook and Instagram and Snapchat and Twitter is that they value each other's opinion. So if you and I were in college together and you were the tech geek working on this invention and that invention, and I was the finance geek and I was spouting cash flow statements, income statements, balance sheets, that's what we knew about each other. Now that you have your money, even though I'm only 27, you will believe that I'm an expert because you're an expert. And that's what you were doing since college. This is what I was doing since college. You believe I know what I'm doing. So I've been saying to advisors, get a millennial on your team because they talk to each other and they value each other's opinion. They're not thinking you're junior, you're inexperienced. And if that millennial on your team can open the kimono and say, yeah, I've been doing this for about a month, but I got all these boys behind me who've been doing this for 40 years. So there's nothing you could need that I can't bring to the table. That would be me, your resource. I'm your open door. That would be me. Then you will do business with me. And that's kind of what we need to have, especially as this money transitions to the next generation. You need to have somebody there that the next generation wants to talk to. They don't want to talk to dad's advisor.
Yeah, I mean, the family dynamic, our units at SunTrust deal with a lot of different things. And how do you get them engaged? How do you make them feel a part of it? How do you get them involved in philanthropy as a step into understanding it? Mm-hmm. But one of the big issues, I think, as a society, one of our big issues is social media. And how do you see social media establishing or, making the point that you do have that trust and you do have that, or is social media noise? Yeah. How do you look at social media and establishing that relationship with those millennials?
Yeah, I got to tell you, social media is definitely not noise because it's here to stay. It's noisy, but it's here to stay. So it's not something that's going to be transient. And I think it's going to change the way that we communicate with our clients. Again, it used to be the case that you'd sit down with your advisor once a quarter or once every other quarter. But now, especially the new clients, the Xers and the millennials, they want to talk like this. And right now, we haven't figured out a way from a compliance standpoint really to make that happen, right? But this is the way they communicate, and that's the way they build trust. You know, even when they're doing something social like dating, they they text for a long time before they will actually meet, right? So for
Well,
some,
it just flipped.
I know, right? so I got to tell you
You're
that
in the wrong app.
Yeah, but it's going to be interesting how we deal with this from a compliance standpoint and keep up with all the communications, because I think that's the way the client is going to require us to talk.
How do you feel about the different roles of the organizations? And some people like the small independent advisor because they feel like they're a bigger fish in a small pond. Some people feel like I'm a $50 million client and I go to Merrill Lynch and boy, I'm just another $50 million client. And I mean, do you think it's important that the client's experience is better or different? I understand having a lot of people behind you, but I also see small advisory firms that have a lot of relationships they've built up because they understand what's essential to a client.
Well, and I'm going to say that's down to the person. I'm going to say that's down to the person, because I think that if you're a strong advisor, even if you're working in a very large firm, the experience that you have with me ought to feel personal, no matter what. So I hear you loud and clear on the independent advisors, and you know, good for them that they market themselves that way, to say you're one of my 10 clients, so I don't have 500 clients, so you can be important to me. Well, if I'm working and I do have 500 clients, I ought to look you in the eye and say, you are important to me, what can I do for you? And make you feel like that when you're in front of me, that you're the only thing that matters to me right now. So I gotta put that on the person as opposed to the institution.
It seems like in the industry, the fees and the pressure on fees is becoming more and more. When we don't know if we're in deflation. I know we're not in inflation, but I know we're not doing much in terms of an economy and growth. So I know that everybody's consciousness of fees is important. How do we transfer the discussion to value versus fees?
And that's why I think the personal touch and really connecting into your client makes all the difference. Because if you have to start competing around fees and price, then I think you've lost the war. You know, you might win that small battle at that point, but you've lost the war. You can never get out of that loop. So I think that when you're talking to someone about the value that you bring to the table, you need to make sure that you are valuing yourself and what you bring to the table appropriately, but you need to be able to back up why your fee is X and what you think you're bringing to the table.
Yeah, I mean, I think that one of the things, we just came back from the CFA conference, and indexing was still the, I mean, how do you feel about the active and alternative space in this environment? And how do we discern whether it is true value that we're bringing?
Well, I have to tell you, I'm an active girl as opposed to a passive girl, because I think in times like this, when the market goes down 200 points and 300 points, I call my advisor and say, let's go shopping. Right, because I think it's a real opportunity. So I'm not, and I get the whole index argument, and it's hard to debate the numbers over the last few years, but my personal preference is I like the value that somebody brings to the table in making suggestions around industries and around discrete stock opportunities. That's just my personal preference.
Okay. Yeah. I guess I'd like to end with one last question, which is, how would you advise anybody in the room to make that move in their career, whether it's getting another designation, getting a new position, finding their passion? What is it that you think that people need to do in their careers to rise up?
Yeah, I think the most important thing that you can do is have a personal agenda. You know, and the professional and personal agenda is around, why are you in the seat that you're in, and why are you in the house that you're in? And the seat is the job, the house is where you're doing it. So you need to have a reason why you're in that seat. What kind of skills do I want to get? What kind of experiences do I want to have? What kind of people do I want to meet? What kind of networks do I want to build? And it makes it very easy then for you to figure out when it's time for you to move. Because when you're not feeling comfortable anymore, you're not jumping up out of the bed and feeling excited about what you're doing, you go back to the agenda and you say, have I fully prosecuted this seat? And if the answer is yes, then now the answer is easy for you. You know it's time to change the seat. And then you ask yourself the question about the house. do I still like the house? Do I like the people? Do I like the career platform? Do I like the career trajectory? And if the answer is yes, then you're in the right house. If the answer is, oh no, there's still things for me to prosecute in this seat, but I don't really like the house anymore. Their values not aligned with mine. I don't think I have a respected voice here. I don't like the platform I'm on. I don't like the career trajectory. Then you're in the right seat, but it's time to change the house. But if you don't have that agenda, it's very easy for you to make emotional decisions. Oh, I didn't get promoted this year. Or, oh, they didn't back me up in allowing me to do this client thing. And you're angry and you make a decision. But if you have an agenda, then it won't be driven by emotion. You can then take those, what I call discrete disappointments, and say, okay, how do I turn that around and make it a chit for me in this environment and make it work for me? So I think it's about knowing where you want to go. And it might sound trite, but so many of us jump into a career for whatever reason. It was convenient, somebody turned me on to it, first job out of college, lights of debt, and it's kind of been going all right. But then all of a sudden you look 15 or 18 years and you're like, okay, I've been doing it, might as well, but I put so much time into it already, I'll keep doing it. And given where I am in my life, life is short, right? And as a good friend of mine said, it's real life, it ain't a dress rehearsal, right? So you gotta make sure that you're spending it in a way that's giving you the biggest return.
Yep. Okay. I'd like to open it up for any questions in the audience. I can ask more questions, but I'd love to.
Sure. One of the big stereotypes about millennials, other than their wanting each other's opinion, is not wanting to ask that opinion face to face.
Yeah.
They want to do everything online.
That's right.
That's really fed in. Some think that along with passive management and lower fees is fed into the robo revolution for portfolio management. What's your opinion on that? Where do you see it going?
Yeah.
And where can we utilize that as a tool, even though we're active managers?
Yeah, I got to tell you, I think there's a place for robo-advisors, but not as people get more wealthy. I think the robo-advisors are really serve those folks who are just getting into the market for the first time. But I think as people start to build their wealth and their life becomes a little bit more complex than just going to college or having a job and having an apartment or a condo and a car, I think that's where they will start to depart from the robo-advisor, because they want someone who can answer the question about whether or not should I buy my first apartment now, I have this amount of assets, or should I lease or should I buy this car? What's the right financial decision? I think they want someone who can think a little bit more holistically about who they are. So I really am not threatened by the robo-advisor for our business at all. I do think the texting and the way people communicate, that's a big deal that we're gonna have to figure out, like I said, from a compliance standpoint, especially when every email has to be cleared, these days, because that is the way they want to talk. And I don't know how we're going to get around that. I don't know if there's going to be some big brother looking at that or whatever. Your phones are going to be connected.
Just use your personal phone instead of your corporate.
Yeah, exactly. Something. I don't know. But we're going to have to be able to text people, right? And maybe you're right. Maybe the way they do it is to have a corporate phone. And you need to have the text going through the corporate phone. Maybe that's the way it's going to happen. But I think it's going to be a necessity to be able to talk to your clients by texting or by whatever the new thing is 5 years from now. It might just be talking to the watch, right?
Any other questions?
Yes, sir.
So recently I spoke with a financial advisor from Morgan Stanley, and what he had said was that he encountered and he seemed to have a problem with a high washout rate. And is that because in this industry, in the wealth management industry, is it because they don't have a sponsorship mentor advisory type of relationship community? They kind of see that new person as a competitor and they kind of push them off to the side. Is that environment kind of helping contribute to, I guess, even females not wanting to go into the industry and wanting some of the less risk or more risky personalities?
Yeah, I will tell you that I don't think it's, we were just talking about this, I don't think is that they necessarily see people as a competitor. Here's the difference. In the wealth management side of the business, as I said, it's really a confederation of entrepreneurs. So it's really about whether or not you, the advisor, want to invest in me, the newbie that's come in, and whether or not you feel like you have the time. And then there's the argument, and what is in it for you to help me? Unlike the institutional side of the business, when I come in as a first-year associate, brand spanking new, wet behind the ears, the way I am assigned projects is I get assigned to everybody on the floor. I may work for you on one deal, and in my first year, I had a transportation deal, I had an energy deal, I had a retail deal. I worked, for all the partners that were there. And that's kind of how life is for me for the first 3 years. And then I'm a third year associate. At the end of that third year, if I've done well, I get promoted to VP. At that point, usually I'm now in a group, and my job is to grow up and learn all of his clients. I'm still kind of carrying his bags because we're both in a transportation group now, but my job is to get to know people at my level. So as I rise through the organization at Morgan Stanley and become an MD, hopefully the folks who are at my level, they become decision makers at the client. And when he's ready to sit down, I now own the senior people who are making decisions at that client. That's how it happens on the institutional business. So we are motivated. He's motivated to invest in me because at some point he wants me to take some of those deals, right? Whereas you, it's your business. You're not necessarily motivated to help me when I'm supposed to be building my own. What is accruing to you other than a split on a particular transaction? Oh, by the way the industry works, I'm not motivated to split with you. Because you're the senior person and I bring a deal, you say no problem, I'll take 9 and you take 10. I don't like that. That sucks. So what happens? I go out on my own and try to do it without you and I fail. Anyway, because I needed that senior expertise and I don't win the book. When in fact, I could have gotten a client in and you would have gotten 9, but that split's not fair. So one of the things I think we need to do from a reform standpoint, if we want more people to kind of hang in there as they're trying to build their book, is that there needs to be some and every time I say this, I can feel the arrows and the bullets. But there needs to be some kind of legislation around splits, right? That if we're gonna split it, it's 50-50. Now I'm motivated to hustle. And you're motivated, I hope, to help me.
But if I'm bringing all the value and you're just bringing why would I split 50-50 with you?
There you go.
I think we gotta go somewhere between 50 and 90.
I've been on the hunt. I've been running through the woods. I shot the animal, right?
You got referred that animal from somebody else.
Right. So that's what happens, and it just keeps going, and that's why you have a young advisor, whether it's a woman or a person of color, go out there and they hustle, and then after X amount of months they don't make it and they wash out. That's why there's not a real what I call apprentice program, which is what you need. Because if you've never been in the wealth management side of the business, you need to carry somebody's bags who's really good. I need to sit in his office and listen to his pitch. I need to go to the first meeting and listen to how he turns that around or takes a family situation and actually, gets that business and that business out of it. But you're not exposed, you don't know how to do it. Yes, ma'am, then I'll come back here.
It seems like this might be an opportunity for Morgan Stanley and other groups to invest in something along the lines of SCORE, okay? So that they've got their own retired wealth management people that are paid to help with some of this, helping the new entrepreneurs get up to speed.
Yeah, I tell you, I like it. I like that model a lot. I just haven't, and I think it would work if you had a critical mass of advisors who were willing to do that. But you'd be surprised, there's not that many out there that's willing to do that. Because first of all,
Who retires.
Right, there you go. He took the words out of my mouth. That's exactly right. He said, who retires? See, that's a part of the business, whereas on the investment banking side of the business, you don't see too many 50-plus-year-olds walking around. You don't.
It may be the responsibility of Morgan Stanley to invest in people being paid to be supportive for the youth.
No, I agree, but his point is, where's the critical mass of people who want to do it? Because those that you would want to do it, who are really good, who you think would be good, they aren't retiring.
What if Morgan Stanley pays the new advisors directly to stick around until they...
I like that model too. I suggested that too. I got the answers. The question is whether or not the industry wants to go that way. Because I agree with you that if you gave me a salary, which is what I get on the institutional side, while I'm getting up to speed, then there's a higher probability that over that 36 months, 48-month period of time, I've gotten the skills that I need and I've built a book that I can then survive. But again, it's a competitive industry, as you know, and one firm is not willing to break out of what I call industry mode, industry standard. But either one of those suggestions, in my opinion, would change the washout rate.
Well, one follow-up question on that is, what kind of screening do you have of applicants to these jobs that would identify their entrepreneurial nature?
Right, and you heard me at the beginning saying that's not what the industry looks for. That's what I gave you was my view of what we should be screening for. And that if we screened for that, I think you would have, again, fewer people who would wash out, because you've now been looking through a lens around what it takes to be a good entrepreneur, not just whether or not you like helping people build their wealth. That's a broad, and you like interacting with clients. And I have heard every firm talk about it that way from a recruiting standpoint.
Are you a people person?
Am I a people person? A little bit.
No, I think that's what a lot of people recruiting believe that.
Absolutely.
But I also believe you need some skills with being a people person is one
That's right.
facet of.
That's right. That will not make you successful in this business. That's right. I'll go here and then I'll come back to you. Here, and then you. Yes.
Do you just in general see fewer people in business overall, whether that's management, institutional, asset management? Do you see just the head count in the whole industry coming down?
Yeah, we were definitely impacted by that Occupy Wall Street stuff. No question about it. I do think that, and I was very surprised at the severity of the reaction that people had about Wall Street, especially given that Wall Street and Main Street have always been inextricably tied. We just didn't talk about it the way we talked about it, in this last crisis. But I do think coming out of graduate school, there were far fewer people who were interested in coming to financial services. And out of undergrad, oh, absolutely. In undergrad, because I've done a lot of undergrad recruiting for Morgan Stanley, our competition used to be Goldman Sachs, Merrill Lynch, McKinsey, Bain, BCG, and now it's Google, Apple, Facebook, Twitter, all the top kids who are graduating at all the top schools. Those are the jobs that they are actively looking for. We are not in the top 3 anymore. No, so we definitely have taken a hit. And I don't think it's just the the negative hit that we went through during the financial crisis. I think it truly is the sizzle and sex of technology, the way we had the sizzle and sex in the 80s. That's what I think it is. Sexiness, not sex. Yes, sir.
I have a small registered investment advisory wealth management firm, and I have a female partner, which I think works out, she's not here tonight, but it works out really, really well with clients. But as we're thinking about succession planning and trying to hire somebody who can take it, we just in the last year got the first questions from clients about, so what happens when something happens to you guys? We never got that question before. So now we're thinking about hiring an associate advisor who's younger. We actually want somebody who is not that entrepreneurial. Because if somebody's really entrepreneurial, they're going to be here for 2 years, 3 years, and go, shoot, I'll go start my own firm. So we want somebody, ideally, who's female, because I think that the rapport and everything is really, really good with clients, but who is not a go-getter necessarily on being a rainmaker, and somebody who can sort of take over the practice and take it incrementally forward.
Yeah, well, but the thing is, though, if you say you don't want somebody that's a rainmaker, then what you're telling me is that you're not interested in growing your practice. You just really want somebody to kind of, for lack of a better word, and I'm going to use this word because it's a harsh word, kind of babysit the clients. And if you really want to grow your practice, I would argue you do want the profile of the person that I'm talking about, but you want to make it worth their while to stay around. You want to set up a situation where they feel very good about being a potential partner in your firm, which means you need to think about what it takes to be a partner in your firm. Do you have to buy into it? So you need to think through, well, what's the profile of somebody who goes out and start their own firm? What would they need? What kind of capital would they need? How can I make sure that that alternative looks like it's a hell of a lot harder than them staying here and really being a partner? That's the setup you want to think about before you bring that person on.
Well, going back to sort of what Steve was saying, you guys are talking about the splits. The fees aren't high enough to make it worth taking somebody on that's going to be entrepreneurial and want a big chunk of what they bring in?
Yeah, maybe not at the beginning. Maybe you set up at the beginning, you say, look, maybe you haven't done this before, but I see the potential of you being able to grow a great practice with us. And here's what the economics are going to look like in the early days while you're still learning and cutting your teeth and blah, 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 blah. And maybe you keep that setup for 24 months, for 36 months, or maybe you extend it. You set it up that way. So as they're continuing to bring on more business, or if she turns out to be a rock star and she's bringing in a lot of business, you might want to accelerate whatever schedule you put out in terms of the splits. So maybe now it's not worth your while. Maybe now you do an 80-20 or even a 90-10. And if they're hungry and you say, but when you get to this level of production in terms of people that you brought in or amount of assets that you brought in, that split now looks like this. So that she's working even harder to try to get to that threshold to then go to the next level. And then at some point you make her a partner, whether that's 3 years or 4 years or whatever it looks like, but when she's gotten to a certain threshold, and then she's on her own. But you make the experience worth her while to stay, that it's far more interesting to stay with you and grow and become a partner in your practice than to go out and start her own thing. And I would say that even if she does go out and start her own thing and she's a rock star, you have accrued some benefit. You've gotten a piece of something, because 100% of zero is zero, right? Versus nothing. So even if she did that and she was a rock star, you still will have benefit, in my view. Because I think if you get somebody that's just kind of docile, then you have a very high-end customer service person, and that's fine. That's perfectly fine. But if you're trying to grow your business, then you want the profile of what we're talking about. Especially you started off saying that we want to think next generation and hand the business over to. Well, if she doesn't have the profile that I talked about, how are you going to hand over the business?
We have time for one more question. I think you have 6:30.
Yes, I have 6:30 call.
All right. You have one more question?
Oh yeah, it was right here, yes.
I would think it'd be a lot tougher to get a sponsor in an organization than to get a mentor because of the political capital involved and the career risk. And I'd also think that somebody as successful as you has probably had quite a few sponsors. How did you garner those sponsors other than just doing a good job?
Yes, and I'll tell you that I haven't always had a lot of sponsors, right? I had to go out and get my sponsor. So nirvana is when somebody takes you under their wing and say, I'm gonna make it happen for you. But that doesn't often happen for women, and it doesn't happen that often for folks of color. So when it was critical for me to definitely have a sponsor because it was a big promotion, I went to someone who had the profile that I mentioned earlier, had a seat at the decision-making table, had the juice to get it done, and was internal and had exposure to my work. Because in order to have credibility behind closed doors, they have to have exposure to your work. So I went to that person and I said, it's really important for me to get promoted this year. There's nothing else that I can show the organization about my readiness or my worthiness. And you and I both know that somebody has to be behind closed doors pounding the table on my behalf. You know me, you know my work, you know the client feedback. And I think you will do a terrific job on my behalf. And the guy sort of hummed it. But then he said yes. And so why was that an important conversation for me to have? If he had told me no, he was going to have to tell me why. And that would have been important data for me from which to make a decision. Data is your friend. You can't fix it if you don't know that it's broken. So that would have been important. But he said yes, he would get it done. So I would say to each of you, as you all have power, think about who you're spending that power on in your organizations. And we started this conversation about women. It is really important that you look around in your environment and look at the women that are there, right? And I would say that the woman that is worthy of your sponsoring is the woman that would be willing to use her power and sponsor for somebody else. That's how I make a decision around who I will mentor. I will advise anybody. So we talked about the difference between advisor and mentor. I'll advise anybody. But the person that I'm going to spend that extra time with, getting to know so that I can truly mentor, is only going to be someone that I think will, number one, embrace and act upon the advice, because I can give you the advice all day long, but if you don't have the courage to execute, you're not going to get anywhere. So I have to know that they will have the courage to execute, but I have to know that they will do something for somebody else. They'll do that same thing. So sometimes my mentors, because I travel, they're talking to me at 5:30 in the morning if they really need to get my ear. Well, I need to feel that you're going to talk to somebody else at 5:30 in the morning, right? And then I'm gonna bother to spend that extra time to mentor you, and I'm gonna bother to spend my capital on you behind closed doors as a sponsor. So that's how I, discriminate, if you will, of all the people that would ask me to mentor them. That's my lens that I look through.
Oh, thank you. Thank
You guys
you
have been great.
Thank you
Thank
for
you.
investing your capital with us. I appreciate it.